Welcome to the Knakal News Network. Knakal News Network is brought to you by Massey Knakal Realty Services, New York's #1 building sales firm.
Hi, I'm Jon Hageman, Sales Team Manager for Massey Knakal. Today I'm here with Bob Knakal, Chairman of Massey Knakal, and we're here today to talk about the national housing market and its importance to commercial real estate. Bob, one of the things I found interesting is how much attention you pay to the national housing market. Can you tell me a little bit about that and why you do that?
Sure. Well, actually, Hags, the national housing market has a lot to do with how our overall economy is going to perform. If you think about it, for most Americans, their home is their largest investment, and the amount of equity they have in that home has what's called a wealth effect. And to the extent that folks feel like they have a lot of equity in their house, they are going to feel more optimistic about spending. They're going to go out and spend more. And as you know, our economy is 70% consumer-based. So to the extent that folks feel like they have a lot of equity in their homes, they're going to feel more optimistic about going out and spending money. It impacts corporate profits. And when corporate profits are impacted, it impacts the underlying fundamentals of office space demand, retail space demand, demand for apartments.
And what about the home ownership rate? Why is that impactful?
If you look at the average home ownership rate in the country over the last 40 years or so, it's been about 62, 63%. And we've actually gotten into trouble when politicians have tried to manipulate that rate. You can make a great case that the reason that we got into the Great Recession was because the housing market got overheated, and that started quite a while ago when the government decided, hey, it would be great if 75% of Americans own their homes. So they induced Fannie and Freddie to basically purchase any type of mortgage they possibly could, so their standards were lowered. And I remember Barney Frank famously saying, well, let's just roll the dice with Fannie and Freddie, and we saw what happened to them during the Great Recession.
Bob, tell me what's happening with home values today.
Well, from the peak of the market in 2006 to the bottom of the market in 2009, home values lost about 38%. Today, according to the Case-Shiller Index, property values have come back to the point where we're only about 5% lower than we were, but values are making a strong comeback, and we see that moving forward.
What's impacting value the most?
Low interest rates do play a hand in this, but really what has been more impactful on home values are supply. We've seen in the peak of the market years, private sector home builders were building 1.5 to 1.7 million homes a year. That dropped to below 500,000. So what we're really seeing is a dynamic where our population is growing by about 3 million people a year. Household formation comes out of that, and we haven't had supply to keep up with the demand that exists.
Bob, you just mentioned interest rates being a factor. What do you see happening once interest rates begin to rise?
Well, interest rates have to rise. We can't have a 10-year, which this morning, as of this filming, was about 2.5%. That 10-year rate really should be more like 4 to 4.5%.
Bob, you also mentioned the role that Fannie and Freddie have played relative to the housing market. What do you see that role moving forward?
Well, during the Great Recession, there was a lot of talk about what was going to happen to Fannie and Freddie. They went into public conservatorship, and there was a lot of talk about breaking them up, privatizing them, creating public-private partnerships. Regardless of what happens, it's very clear that they will have to be a little bit more discriminating in terms of what types of loans they purchase. In summary, the national housing market is important to watch as house values impact gross domestic product. Although interest rates have been low, housing starts are the key to value increases within this market segment. What happens when rates rise will be a key in determining the future of our housing market.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.